Here are 7 of the best ways to invest $1,000.
If you have an extra $1,000 sitting in a savings or checking account, one of the best ways to earn a return on that money is to invest in the stock market. If you're new to investing, buying a low-cost, diversified S&P 500 exchange-traded fund is relatively a low-risk place to start. However, if you'd rather begin building your own stock portfolio from scratch, here are 6 of the best blue-chip stocks to buy with $1,000. But before we start our video, welcome everyone to Crypto 2 Million, a channel where you get your daily dose of XRP and everything about crypto. If you like the content, do give it a thumbs up. And if you want to see more, then don't forget to subscribe to the channel and click the bell icon, so you can know every time we upload a new video.
1. Microsoft Corporation.
Microsoft is the world's largest software company and owner of the Windows operating system, Office Business Software Suite and Azure Cloud Computing Service. Analyst Dan Romanoff says Microsoft reassured investors by reporting strong first-quarter Azure numbers and issuing constructive 2022 guidance in a difficult software environment. Romanoff says digital transformation spending is helping Microsoft overcome challenges impacting much of the software industry, including supply chain disruptions, inflation and currency headwinds. He says Azure is migrating unprecedented workloads to the cloud and inking larger and longer deals. Morningstar has a buy rating and $352 fair value estimate for MSFT stock, which closed at $270.41 on June 8.
2. Alphabet Incorporation.
Alphabet is one of the world's largest online search and advertising companies and is the parent company of Google and YouTube. Analyst Ali Morabi says YouTube revenue growth softness in the first quarter is temporary, and Google Cloud growth remains robust. Alphabet generated a $16.4 billion net profit in the quarter. Alphabet management expects overall advertising revenue growth to continue to decelerate in the second quarter, but Morabi says that risk is more than reflected in Alphabet's share price, which is down more than 20% year-to-date. While the stock's price is north of $2,000 at present, Alphabet announced a 20-for-1 stock split that will be issued on July 15. Morningstar has a buy rating and $3,600 fair value estimate for Google stock, which closed at $2,344.76 on June 8.
3. Amazon.com Incorporation.
Amazon is the market leader in e-commerce and cloud services. Romanoff says Amazon's profitability took a hit from inflation and excess capacity in the first quarter, and its guidance was a disappointment. However, he says Amazon Web Services cloud revenue growth remains strong and should benefit from the ongoing shift of enterprise workloads to the cloud. Romanoff says Amazon's profitability challenges will continue to weigh on margins for at least the next couple of quarters, but he expects improvements in the second half of the year. Amazon stock recently underwent a 20-for-1 split on June 6. Morningstar has a buy rating and $3,850 fair value estimate for Amazon stock, which would amount to $192.50 post-split. Amazon stock closed at $121.18 on June 8.
4. Berkshire Hathaway Incorporation.
Berkshire Hathaway is a holding company that owns a diverse portfolio of public and private companies that is managed by Wall Street legend Warren Buffett. If you have $1,000 to put into the stock market, you can essentially buy shares of Berkshire stock and put Buffett in charge of your portfolio. Analyst Gregory Warren says Berkshire's decentralized business model, unmatched balance sheet strength and impressive cash generation make the stock a differentiated investment. Buffett's recent commitment to share buybacks has also supported Berkshire's share price. Morningstar has a buy rating and $367 fair value estimate for BRKB stock, which closed at $308.74 on June 8.
5. Meta Platforms Incorporation.
Meta Platforms is a market leader in social media and online advertising and is the owner of Facebook, Instagram and other popular platforms. Meta shares are down more than 42% year-to-date after Facebook reported its first ever drop in daily active users in February and followed up with a disappointing first quarter earnings report in April. But Morabee says the weakness is a buying opportunity. Longtime Chief Operating Officer Sheryl Sandberg recently announced she will be resigning as COO, but Morabee says a talented group of colleagues is waiting to fill her shoes. Morningstar has a buy rating and $384 fair value estimate for Meta stock, which closed at $196.64 on June 8.
6. JP Morgan Chase & Company.
JP Morgan Chase is one of the world's largest banks and financial services companies. Analyst Eric Compton says JP Morgan is expecting to reach a $66 billion annual run rate in net interest income by the end of 2022, assuming interest rates reach 3%. Compton says JP Morgan's execution in recent years has set it apart from big bank competitors. The company's combination of scale, diversification and risk management may seem like a simple strategy, but Compton says other banks have struggled to keep up with JP Morgan's execution. Morningstar has a buy rating and $151 fair value estimate for JPM stock, which closed at $128 on June 8.
7. Bank of America Corporation.
Bank of America is one of the largest diversified U.S. banks and financial holding companies. The bank's holdings have a relatively high sensitivity to interest rates, suggesting the Federal Reserve could significantly boost its net interest margins in the near term. However, Bank of America shares are down 18% in 2022 on concerns that the aggressive rate hikes will trigger a recession and a slowdown in loan growth. Compton says investors should anticipate rapid net interest income growth in 2022 and industry-leading revenue growth in the years ahead. Morningstar has a buy rating and $41 fair value estimate for BAC stock, which closed at $35.89 on June 8. So guys, this is it for today's video. I hope it could be a great help to you. Share your views in the comments section down below. Don't forget to click the bell icon, and thanks for watching.